Hello everyone, this is Juan Sarmiento and today is Thursday, November the 12th. Okay, the first thing is I'm going to go through all of my current positions and see if I need to do any rollovers. Okay, Apple is just a lottery ticket, 125 calls. Who knows? There is a whole week, I guess, 8 days. Who knows what could happen? So I could close it, I suppose, but let's leave it open in case something dramatic happens and Apple jumps 30% or something. I'm not betting on it, but it's just I made my money already, and if I were to close this, I only get 50 cents out of it. So let's leave that. Then we have this ATVI expiring December the 4th. And as you can see here, December the 4th, that's 22 days away. So I'm in no hurry. I need to close any November 13 or November the 20th. Roll them over, whatever it takes. Let's go to BABA. And these are November the 20th. Now, let's look at the risk graph. And yeah, I could roll this over. Let's take a look at a chart. Yeah, it's falling dramatically. And it's now below the Ichimoku cloud. Why not rolling it over? And I select both calls and puts, and then I say analyze rolling. And I'm going to go to at least 30 days from now. Well, 29 is fine. So December the 11th. And that gives me $7.64 times 100. That's $764. This is money that I can use for other trades. Let's move on. DJX, November the 20th. This is a seagull, if you remember. And what we need to do is just do the one side. And the puts could, if the market drops significantly, you can always sell puts. Okay, that was my BABA, just got filled. Okay, let's do this. Take a quick look and you can see that it neutralizes my deltas here, so that's what I want to do. Let's move on to DHR, and again, November the 20th, and I'm rolling both calls and puts since they're very close to 230, and I'm rolling them to December the 8th, and I'm going to get $735 times 2. That's 1,400 and some. Yeah, $1,470 minus $4 my commissions. And that was it, filled very quickly. Facebook, that's December the 4th, don't need to touch that. Home Depot, November the 27th, let's leave that alone. Okay, we can do this Logitech. We're getting $2 almost, times 4 times, that's times 400, it's $800. TJX that just got filled. I think that the volatility is picking up, and so it makes it easy to trade these things, to roll them over. Let's look at Lowe's, December the 4th, leave that alone. Nike, December the 20th, let's do that as well. That gives me $1,600. Qualcomm, December the 11th. Let's leave that alone. Target, November the 13th, that's expiring right now. Fortunately, the stock is 159 and 145 is my price, is my strike price. Yeah, let's do both as well. I'm closing the Novembers. You can see that the put will be worthless tomorrow. Okay, so you might not even want to do that. Do a three-sided trade. That would be fine too. But let me just demonstrate that. If this was Friday, knowing that the stock cannot go further down much, you can do this. Close the call-sided, analyze rolling, the call side, going to December the 11th. Ignore this one here, okay? I'm just using it to... And then we will also sell puts on that December expiration. So let's go add December expiration and then look for the same strike price, 145 puts. And then I say, I need to press the control key and then click on the bid 3 times while pressing the control key. So this is a three-sided trade. You see that? So that I'm not closing the bearish, the puts at all, because the November puts, I presume they will expire worthless. It is easier if I do that early in the morning on Friday, the day of expiration, or late in the morning, depending on how far it is from the strike price. Okay, you can do it on Thursday, but if you do that, then you're risking that, you know, if you have a strong decline, then you're going to have a big loser. You don't want to do that. So I can demonstrate that to you tomorrow, but I'm going to just simply do the rollover today, the complete. So we need to close those short puts because we don't know if tomorrow the stock is going to open 10 points lower, 20 points lower, 20% points lower, who knows. So I'm just going to do, I need to close my puts. I don't want to be 4 short puts or 6 short puts. I only want 3 short puts. So I'm going to do that this way. I hope that's clear. So this three-sided, I do it all the time on the day of expiration, not on Thursdays, clearly. And then UPS is my last trade here, November, yeah, we're going to do our rollovers here to December the 11th. Great. Okay. You can see that now it becomes more like a straddle, and that's what we want, because we are not making any bets to the upside or downside. We are just making a bet that volatility will increase if the stock goes down, and if the stock goes up, it will be a big rally, and the stock will appreciate. My position will appreciate as a consequence. Okay, let's do that. Confirm and send. Okay, great. Now I have freed some capital as we go along, and there are still some that need to be. So what I'm going to do is I'm going to adjust this right away to just open the lock here so that we are trading at the mid, just to make sure that it gets filled. And there it is, gets filled right away if you do it at the price. Nike here is trading a little higher than my ask. So you can say lower it 5.5 cents. Get it filled, that's what matters here. Okay, and there it is. No, that was UPS. Yeah, the last one was UPS, indeed. Great. Okay, so Nike, let's leave it alone. It is below the market price. There it is, got filled. And then Target is very, very close. Let's reduce it just 5 cents. Cancel, replace, reduce it. As long as it is between the natural and the mid, it's supposed to be a fair price, okay? Of course, we want it as close to the mid as possible. And that got filled. Right, great. So in the process, now I have options buying power 16,000. When I started this, I had 9,000. So by doing all my rollovers, I freed a lot of capital, and now I can trade some more. Let's go here to the Excel spreadsheet because I have two potential trades, Comcast and that's T-Mobile. The T-Mobile trade doesn't look that good. It looks like a huge earnings beat, and the volatility is okay. The liquidity is not so great. So what does that mean? It means that we're going to have trouble getting in and getting out, okay, unless the trade goes in on my way, goes on my favor, and let's say up significantly or down significantly, then it becomes easier to trade out, okay? And the current implied volatility is 21, which is a little too much. Okay, so I'm questioning whether I should be doing this because I'm motivated because the difference in the earnings versus expected is quite large. Let's look at Comcast, and this is all green. It means it's all go. All right. So now I have $16,000 in capital, and I can do those two trades, couldn't I? Okay. And so about $8,000 each. Okay, so let's see. For Comcast is $880. And if I do 9 of those, it will cost me $7,920, which is close to half the price, half the capital I have. If I did the T-Mobile, let's see, the price, the average is $23.68. So if I did 3 of them, there you go, is below my whatever capital, $8,000 that I have. Okay, good. So I'm going to copy these. I already have them actually. You can copy from here. These proposed trades came from my account, okay, from my actual account. That's where I created this. Okay, let's look at T-Mobile first. Analyze TMUS, and this is the trade. So how did I do this? Well, remember, two straddles at the same strike price. In this case, the closest one is 125, and I'm selling the December 11th, which is about a little over 30 days to expiration. No, 29 days, very close. And then I'm buying at least 90 days to expiration. That is February the 21st. Here, January 20th, February, sorry. The 19th, and that's 99 days. That's more than 90 days, and that's how I chose it. And the rest is all calculated by this Excel spreadsheet. So let's create that. The bid and ask is a little hard, okay? Confirm and send, and let's say multiple here, because I want to do, remember, I want to do 7,000. So I think it was 3 lots. Yeah, $7,000. You see what I did? I increased the quantity. That means 3 different lots. That is, that Gini trade 3 times. The exact Gini trade 3 times. And it says that my buying power effect is $7,000. Let's set that off. And the other is Comcast. CMCST. Okay, here we are. And we want to do 9 of those. 9. Okay. create duplicate. I mean, the principle is the same, okay? You see December and March. March is a little further out, but we don't have February. Yes, we do have February. Actually, February will be cheaper. Let me just analyze that. If I did, instead of March, let's do February. Okay, and we could do 10 of those. With these, the higher price, if we go all the way to March, it will be a little more costly, and then we could do only 9 of them. Okay, so let's do 10. Create duplicate, confirm and send, multiple, and you can see that now, yeah, we have 10, and the cost is $7,370. That's less than 10% of my account, and I'm willing to do that. Okay, just make sure that it's the right account. Okay. Okay, it says that I'm not allowed to use proceedings from, so that's going to have to wait till tomorrow, unfortunately. So I will do that tomorrow to make sure that it gets filled, that trade. And that's all there is to it. In the meantime, the T-Mobile is not getting filled, so it is already quite a bit below. You see that? No, it is right at. So we're gonna have to wait and see. I will keep an eye on it and make sure that these 2 trades get done between today and tomorrow. That's all for today, so thank you very much, and I'll see you next Thursday. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.